Have you ever wondered why investing feels so complicated and intimidating, even though so many people say it's simple? Between constant news, market noise, and endless opinions online, it's easy to feel overwhelmed before you even get started. In this video, I'm going to break down why investing feels harder than it actually is, what makes it seem confusing, and how simplifying your approach can lead to better results over time. Once you understand this, investing becomes far less stressful and much more effective. Before we jump in, if you want clear, no-fluff investing advice that helps you build confidence, hit the like button, subscribe, and turn on the bell so you don't miss future videos. Too much information. We live in the information age, and when it comes to investing, that's both a blessing and a curse. Every day, you're bombarded with market news, stock tips, economic forecasts, and expert opinions. CNBC is shouting about market crashes. Twitter gurus are hyping the next big crypto. Your uncle swears by real estate. And somewhere in all that chaos, you're supposed to figure out what to do with your money. The problem isn't that information is hard to find. It's that there's too much of it. Most of this noise is either irrelevant, contradictory, or designed to grab your attention, rather than help you make smart decisions. Financial media thrives on drama because fear and excitement sell. A headline like "Market drops 2% gets more clicks than long-term investors should stay calm. So you end up thinking the market is more volatile and unpredictable than it really is. The truth: successful investing doesn't require you to follow every market move or predict the next crash. In fact, tuning out most of the noise is one of the smartest things you can do. Your brain works against you. Here's a fun fact. Your brain is wired to keep you alive, not to make you rich. Thousands of years ago, avoiding danger was more important than taking calculated risks. That's why losing money feels way worse than gaining the same amount feels good. Psychologists call this loss aversion, and it's one of the biggest reasons investing feels so scary. When the market dips, your instinct is to panic and sell. When everyone's talking about a hot stock, your fear of missing out kicks in, and you want to jump in without thinking. These emotional responses are normal, but they're also what lead to bad decisions. The stock market has always gone up over the long term, but it's never been a smooth ride. There will always be dips, corrections, and crashes along the way. The investors who succeed are the ones who expect volatility, ignore their fear, and stick to their plan. Your emotions will try to convince you that this time is different, that you need to act now, that you're making a mistake. The reality: the best move is usually to do nothing at all. Get rich quick, get rich slowly. Let's be honest. Most people don't want to hear that building wealth takes time. They want the secret formula, the insider tip, the investment that doubles in a month. Social media doesn't help. You see people bragging about massive returns on meme stocks, crypto moonshots, or day trading wins. What you don't see are the losses, the stress, and the fact that most of these stories end badly. The truth is, investing isn't about hitting home runs. It's about consistent singles and doubles over decades. Warren Buffett, one of the greatest investors of all time, didn't get rich by chasing hot trends. He got rich by making smart, boring decisions and letting compound interest do its thing. If you start investing early and stay consistent, even modest returns add up to serious wealth over time. A 10% annual return might not sound exciting, but over 30 years, it can turn a few $100s a month into over $1 million. The problem is, that doesn't make for a sexy Instagram post. So people chase quick wins, lose money, get discouraged, and decide investing isn't for them. But it's not investing that failed. It's their expectations. Simple works better. There's a massive industry built around making investing seem complicated. Wall Street wants you to think you need expensive advisors, proprietary algorithms, and sophisticated strategies to succeed. But here's the dirty secret. Simple strategies often outperform complex ones. For most people, a diversified portfolio of low-cost index funds is all you need. Index funds track the overall market, so you're not betting on individual stocks. They're cheap, require almost no maintenance, and historically deliver solid returns. Yet people feel like this is too simple. They think they need to pick stocks, time the market, or use advanced techniques to beat the average. The reality? Even professional fund managers struggle to beat index funds over the long term. If the experts can't do it consistently, what makes you think you can? The best investing strategy isn't the most exciting one. It's the one you can stick with for decades without second-guessing yourself. Stop comparing yourself. Another reason investing feels hard is because we're constantly comparing ourselves to others. Your coworker made a killing on Tesla. Your friend retired early thanks to Bitcoin. Meanwhile, you're just trying to figure out how to open a Roth IRA. It's easy to feel like you're behind, like everyone else has it figured out, like you're missing opportunities. But here's the thing. You only see the highlights, not the full picture. That coworker who bragged about Tesla. They probably lost money on 10 other bets they never mentioned. That friend who retired on crypto. They got lucky, and luck isn't a strategy you can replicate. Your financial journey is yours alone. Your goals, timeline, risk tolerance, and situation are different from everyone else's. Trying to copy someone else's success without understanding the full context is a recipe for disaster. The only person you should compare yourself to is the version of you from last year. Are you saving more? Investing consistently? Learning and improving? That's what matters. How to actually start. So how do you cut through all the confusion and actually start building wealth? First, ignore the noise. You don't need to watch the market every day or follow every trend. Set up automatic contributions to your investment accounts and let time do the work. Second, accept that volatility is normal. The market will go up and down. That's not a bug, it's a feature. Stick to your plan and don't panic. Third, keep your expectations realistic. You're not going to get rich overnight, and that's okay. Slow and steady wins the race. Fourth, keep it simple. A diversified portfolio of index funds is a proven strategy that works for the vast majority of people. You don't need to outsmart the market. And finally, focus on your own journey. Stop comparing yourself to others and start building the future you actually want. Investing doesn't have to be complicated, stressful, or scary. The hardest part is getting started and staying consistent. Once you do that, you'll realize it was never as hard as it seemed. When you step back and look at it, investing isn't about constant action or perfect timing. It's about patience, consistency, and ignoring unnecessary noise. The simpler your approach, the easier it becomes to stay invested. I'd love to know, what part of investing do you find the most confusing or frustrating? Drop your thoughts in the comments. Chances are others feel the same way. If this video helped make investing feel more approachable, don't forget to like, subscribe, and share it with someone who's been hesitant to start investing. Thanks for watching, and I'll see you in the next one.